Just as a reminder for everyone, can you tell everyone what QQQ is?
Sure. So QQQ is the fifth largest and the second most traded ETF in the world, and it tracks the NASDAQ 100 index, which is one of the most widely recognized indexes in the world. Now, the NASDAQ 100 invests in the 100 largest non-financial companies that are listed on the NASDAQ stock exchange. And really what we've seen through the years is that QQQ has become synonymous with the large cap growth category. We see QQQ comprise about 27% of all large cap growth ETF assets now. And really, I think that can be attributed to the fantastic job that NASDAQ has done with attracting new technologically focused companies to list on their exchange.
So I know this panel is also called Timely Innovation. I know QQQ is associated with innovation. How do you actually define it?
Sure. So as what we've seen through the past few years, innovation has been a very widely used term, not just within our industry, but across the board. You know, we like to say that innovation, the actual term, doesn't appear on a financial statement. So how do you really define it, which is what I think is key to when you're focusing on investing in innovation. So really, we look at two key metrics when we define innovation. The first would be research and development spend. Obviously, companies that are spending more and focusing on research to develop new products help the companies remain relevant today. But research and development is also a longer-term commitment to their business. It's something that the research and development spend doesn't show up on the bottom line necessarily this quarter or the next quarter. It's a commitment to keep them relevant for years to come. The second key factor that we look at would be patent activity. And really what we want to see next after large research and development spend is that a company is able to patent that technology to be able to gain some sort of asset for their balance sheet, along with being able to monetize that research and development going forward. And what we've seen from NASDAQ 100 QQQ companies is that we've seen greater patent activity within those companies within key technologies that are relevant not only today, but also should be relevant for years to come.
And so what does that all mean for the investor?
Sure. So it really means two things. The first thing that I think it really means, and I think is very relevant to younger investors, is that it gives you access to these companies that are the leaders within their industry when it comes to innovation and on the leading edge of changing where their industry is necessarily may necessarily be going. Secondly, what I would say, and more importantly, is that investors really invest in companies seeking fundamental growth. You know, at the end of the day, we talk about research and development and patents, but if they're not growing their fundamentals, then you're not going to see the stock price rise as much as you would like, probably. So what we've seen from NASDAQ 100 companies, QQQ companies, is that their fundamentals have outpaced that of the S&P 500 and the Russell 1000 growth within key areas such as earnings, revenue, and dividends.
Can you just talk for a minute about Invesco's commitment to the individual investor?
Sure. So Invesco is always focused on giving access to different different investments that might not necessarily have been available to the individual investor in years past. I think a really key example of this is the ETF. You know, ETFs have done a fantastic job, and as we all know, have really democratized investing into more complex strategies that might not have been available to individual investors in the past. What Invesco has also been doing is we've also been making a commitment on financial education, especially for younger investors, key things that will help investors along their financial journey.